Good afternoon, everyone,
Yeah,
and
better.
welcome to today's webinar or Understanding Real Estate Investment Trusts, commonly known as REITs. A real estate investment trust is a unique investment vehicle that allows individuals to invest in a diversified portfolio of income generating real estate assets. These assets can range from office buildings and shopping centers to residential properties and hotels. The primary purpose of REITs is to provide investors with a way to access the real estate market without having to buy, manage, or finance properties directly. It allows investors to buy ownership in real estate property in the form of equity and offers better liquidity than the physical real estate investment. Modeled after mutual funds, REITs pool the capital of numerous investors. This makes it possible for the individual investors to earn dividends from real estate investments. Some of the commonly available variety of REITs in India are equity REITs, mortgage REITs, retail REITs, residential REITs, etc. As we navigate through this webinar, we will delve deeper into the key features, types of REITs, mechanisms of REITs, strategies of successful investing, benefits and risks involved, and we will also address any question that you may have. By the end of this webinar, you will have a comprehensive understanding of real estate investment trust and the potential they offer to enhance your investment portfolio. Without further ado, let me take this opportunity to introduce the speaker of this webinar, Mr. Kunj Bansal. Mr. Kunj Bansal is General Manager at NISM. He is a seasoned finance professional with almost 3 decades of corporate experience. In these years, he has worked at some of the best brands such as Reliance and Kotak after starting his career at UTI. He worked in the areas related to financial research, securities analysis, and portfolio management. He is an engineer and a management graduate from NMIMS University, Mumbai. He writes on contextual issues over various magazines and newspapers, and his valued opinion is sought by news channels like CNBC, ET Now. He speaks at seminars and conferences and lectures at management colleges. With these words, I welcome you, sir, and over to you.
Thank you. Thank you, Pragya. Thank you for the generous introduction. For myself as well as to the topic of today, I can see that one or two participants have already written that please explain in detail. Yes. So Pragya was only introducing the topic. I am here to explain to you in detail and also take all your questions. Welcome everybody. Good afternoon to this session on REIT. We'll start. Before that, can you type in the chat box if you are able to hear me clearly and properly? Okay, thank you so much. Let's start. Yes, we will maximize the volume. So, real estate investment trust. That's the topic for today. Of course, we'll discuss in detail what it is. But before we exactly go into the REIT, let's just kind of take a step, a pause for a moment, and think that what are the most popular investments or investment for us, typically Indians, and in this particular field. So there are a lot of things in which we Indians are in aligned to the foreigners, have similar thing. This particular thing is quite different compared to the foreigners. So what are the most popular investments? So okay, so somebody has written MF equity. No, that's not the answer. SIP, no, SIP is a format. That's not an investment asset class. Yeah. So gold, some of you have written. Yes, yes. So that's true. So gold traditionally in Indian families, in Indian culture. Yeah, okay. So commodity also you have written, real estate. Okay, thank you so much, and keep participating like this whole day, so that for me it's not boring and it doesn't become a monologue. Otherwise, on online sessions it becomes quite difficult. But okay, now again, hold on to these thoughts. Very rightly, you said that gold is one of the most popular investments when it comes to India. Darshan had said sovereign gold bonds. We'll talk about that also. Historically, we have seen that gold is something that we keep getting passed on from generation to generation. And what is our mindset when we keep gold or when we buy gold or get gold gets passed on? when is it that we will use the gold uh, in terms of typical usage or thought process and all? Any answers you want to type in chat box, that when do we think we will use the gold? Marriage, okay. Loan, crisis, okay. Yogesh, very good point. That's the answer we were looking for. Ravish said gold. Emergency, contingency, yes, very true. So that's the thought process that we have, that we will use the gold when an emergency comes, when a crisis comes. Now imagine a crisis comes in the family. Do we really use the gold? What do we do at that point of time? Any answers you want to type? So Sohail Malik has said no. Cash first, insurance, no, loan, pledge. Okay. So why? Why this fancy? If we have the gold which we are, whatever we call it, traditionally getting passed on or holding on to be used in emergency, when an emergency comes, we typically think that no, even far more worse emergency might come. I will use the gold then. Let me try to use some other resources. So if there are any existing savings, cash, investments, mutual fund, borrowing from friends and family, and we don't use gold. In a worst case, some of you have rightly written that we go and pledge the gold, take a loan against gold, mortgage the gold, but we don't sell it. So that's the love that we have with gold, all of us. What's the second most popular investments that we have in India? So some of you had already answered that in the earlier part, so I'll move on. So you are right. Yeah, okay. So we have gold as the first, or maybe whatever, and second is property. So these are the two most popular investments that we have in India. Of course, what is becoming popular now in last few years or so? Any answers? Yeah, mutual fund, equity, SIP, share market. Yes, that's becoming popular. But let's keep in mind that out of 140 crore population, of course, a lot of them are not above 18, so we can't exactly count them. We still have hardly, or rather, less than 10 crore kind of investors in equity, whichever measure you want to take in. You want to take the NSDL plus CDSL depository accounts. You want to take the mutual fund portfolios or any other parameters. We have less than 10 crore of equity investors. But possibly the gold will be there with all. Real estate may or may not be there. We will come to the reasons. So Swashwan has said only 4%. Probably that number has gone up. Manish is saying 30 lakh demat account in November and 40 lakh in December. But yes, total put together since inception, they are uh, quite high. Of course, less than 10 crore even now. Coming back, so now that if that is the scenario, let's look at some other things moving forward. I've already said gold and real estate are the two most popular investments. Now, what what is the form or shape of these assets, these investments, gold and real estate? So I've already written the answer, but still, yeah, physical assets. As against which are the other type of assets that are there or that can be there? Yeah. So some of you have rightly written financial assets. Tangible and intangible are different. Financials are also tangible. Intangibles are something like intellectual property, the ability to be creative, and all those assets for actors, the ability to act. Those are intangibles, but these are all tangibles. So we have financial assets against these. Now, what is the comparison of physical assets and financial assets? On what all points we can compare them? Okay, Yogesh has said easy to hold. Liquidity, Karthik has said. Okay, good point. Storage cost, very good. Okay, easy to monitor. Physical assets have expense. What kind of expense? Okay, they can get stolen. Okay, yes. So you are right. Maintenance is another issue. Mobility yet another issue. Yes. Yeah. So these are all the issues that are there with physical assets as compared to financial assets, which are kind of relatively easily tradable, more liquid, less cost, less maintenance cost, and things like that. So despite these, why do we have so much of passion or so much of love towards the physical assets? Any thoughts? Okay, trust, lack of awareness, growth in value will be there for other financial assets also. Necessity, security, okay, mindset, okay, good answer. You can touch and see them, okay, another good answer. Capital preservation can be there otherwise also. Respect, I am not sure. Okay, good point. So let's stay back here for some time. So as against physical assets, the other kind of assets that we have, financial assets, let's very quickly, although quite a lot of you have answered, for those who are not as active or participating in the chat box, and some of us could be those who also don't know, let me kind of explain in more detail what is the difference in physical and financial assets, and that will take us to the next topic, I mean continuation of our webinar. So these are the main heads of differences or points of differences between the financial assets and physical assets. So first of all, this point nobody covered, minimum investment required. As I have written, in physical, it is generally higher. In financial, it's quite low. Why is it higher in physical? If you have to buy a property, probably even in tier 3, 4 towns and all, you don't get anything for less than 5 lakh. Maybe at best 2 lakh, 3 lakh is what you'll get, a small house, a small piece of land, and things like that. For some people, even that 2 lakh or 5 lakh could also be quite high. Leave aside the fact of the metro cities like Delhi, Mumbai, Bangalore, and all, where any small flats you don't get less than 30 lakhs. Any investments, any property, any land you want to buy, it will be much more, 50 lakhs plus. In fact, crore plus is easily the norm. So one may or may not have that kind of financial surplus moving on. And similarly, gold also. Even if you have to buy 10 gram of gold, you need roughly 60,000 rupees. For some, it could be very low, but for many of us in India, that amount could be very high. As against that, when we come to financial asset, what is the minimum investment required? So I've already written nil, because we can open zero balance accounts nowadays, although a lot of banks are resisting that, but yes, still. Then I have written Jandhan accounts, which became very popular in last 2, 3, 4 years or so. And of course, SIP. So what is the minimum amount that you need for starting a SIP? Yeah, 500 rupees. And for mutual fund, you need only 100 rupees. So that's the biggest advantage of financial assets, that anybody, even a person having as low as probably 10,000 rupees a month earning salary or by way of business, can think of investing in financial assets, whereas he can't think of investing in physical assets, which are gold and property. Then liquidity. Again, if you have to go and sell a property, a piece of land or a small house, it's not easily liquidatable. You certainly can't sell it in a period of less than a month. It will probably go into 2, 3 months, maybe more also, depends on the demands and buyer and seller scenario in that particular locality where you have that property. Similarly, gold also. Okay, gold is relatively easily liquidatable. You can go to the jeweler and he'll easily give you cash. But what are the other disadvantages? When he gives you cash, we'll come to that. Against that, financial assets, liquidity very high. If you have bank deposits, you can go and withdraw them on all the days on the bank branch the bank is operating. If the bank is not working, if it's a holiday, then you can go to the ATM and withdraw. Similarly, mutual funds and equities, you can simply give a redemption, and generally T+2, you directly get money into your account. So only 2 days is what we need. In fact, in equity investments, share investment, now we have moved to T+1 settlement. We are planning to move to T+0 and then online settlement. That will not need even 1 day also. So that's the kind of liquidity. Value is up or down is a separate factor. But if you need money in emergency, liquidity is not an issue. Generating the money in the investment that you made, thinking that whenever I will need, I will be able to use of them. That doesn't happen in gold and real estate. In financials, that's very easy to generate liquidity. Now, gold, when we said it is easy, yes, some of you have already written transaction cost. That's the other point. So when it comes to gold, of course, to real estate as well, transaction cost is something which is very high. When you go and sell the gold to a jeweler or anything, he cuts whatever, he looks at your face, looks at your emergency situation, and he'll cut easily 10% of that day's value, maybe 15, maybe 20. If it's a biscuit or a coin, he'll give you still higher. If it's a jewelry, then he'll say, no, this has this much impurity, let us melt it, let us do this, let us do that, and you don't know what amount we get. As against that, financial assets, that's not the case. The transaction costs are very low. For equity trading, it's a brokerage. For bank deposits, there is no charge. Of course, after it exceeds certain number of minimum transactions, sometimes banks charge. Maintenance issue, again, in case of property and things, you need to get involved. You need to keep looking after the things. If you are given it on a rent, you need to keep monitoring it for maintenance. Even if you're not given it on rent, you are keeping it logged. You have to make sure that it's safe and sound. In financials, it's largely online. You don't have to do anything. Counterparty default risk, another important point which you didn't highlight, some of you. What is it? Can somebody quickly type in? When you sell a property, buyer will say, okay, I'll give you money after a week. Now, buyer default, yes. Fails to perform the obligation. Non-payment, yes. All those are the default risks which are there both for all financial or for all physical assets, specifically gold and real estate. Payment may or may not come. That possibility is significantly lower, almost nil when it comes to financial assets. For all your equity trading, there is a clearing corporation which is responsible for your payment, even if the counterparty has defaulted. They have separate mechanism of dealing with counterparty. So these are the important points. Now that we know, obviously, what should be our preferred mode of investing? Can somebody quickly type? Obviously, financial assets should be our preferred mode of investing. But the point comes that I want to invest in real estate. Can I invest it in a financial format? Somebody said no. Yes, that's what we are here to address. You can. Now you have mechanisms whereby you can invest. Okay. So just to make it, if some of you recall this movie Khosla Ka Ghosla, you would know how difficult it is to handle the real estate and things like that. In fact, I will skip this and skip this also. So going back, we all know. I mean, a lot of movies it has got covered how real estate is so difficult, how the land sharks acquire your property, how difficult it is to get it out of them, and then whatever you have almost goes in bribing many people and things like that. So how do we convert physical to financial is where we come. For gold, if we want to convert physical to financial, what are the options? Can somebody quickly type in the chat box? Sovereign gold bonds and ETFs, yes. So these are the two ways in which you can convert gold from physical to financial. In case of real estate, which is the other one we said, how do you convert physical to financial? Is where the REITs come into the play. Yes, a lot of you have answered that. Real estate investment trust. So that is a vehicle that is available to us in India now. In fact, more than 10 years or so, closer to 10 years, although of course it has not become very popular. And that's the idea for today's webinar, is that a lot of you who don't know this, very low investment, 10,000, please check that number, Ritesh Kumar. We will address that issue also. Is it 10,000? Is it higher? Is it lower? InvITs, Nikhil Bansal, yes, but InvITs are for infrastructure investment. Our today's webinar is focusing on real estate investments. So REIT, as I was saying, is now available for quite some time, although hasn't become very popular. And that's the idea of doing this webinar today, that we get an understanding of REIT, its availability, its advantages, disadvantages, and things like that. And we can now invest in property if we want to through REIT with all those advantages of financial asset that we saw: low minimum investments, liquidity, less maintenance, no default risk, and things like that. So Sahil has asked, is REIT a popular instrument in India? Unfortunately, not till now. But going forward, it is likely to become popular. In fact, only 2 months ago, 3 months ago, in the month of November, SEBI has cleared smaller REITs also, SM REITs, small and medium real estate, which are likely to make it more popular. But again, that's the idea of today's webinar that we see. So what is a REIT? Can somebody quickly type what is REIT? The topic that we have been talking about. So we have seen, we have discussed that it's a way to invest in real estate, number 1 point. 2, it's the conversion of physical asset to financial asset. So that's the other point. So what we are saying is that REIT is an instrument through which we can invest in properties, real estate, in financial form. We don't actually have to go and buy the property. And as a result, we avoid all those disadvantages of investing in. So this is what a REIT is. A real estate investment trust is a company that owns and operates. You can leave that technical part. Let's come to the second paragraph. It is modeled after mutual fund. So it's something like mutual fund. You can say not exactly a mutual fund. Technically, the two are different, the definition wise and structure wise, but something like that. It pools the capital of numerous investors. Who regulates this? SEBI regulates REITs, but we'll come to those questions later. So REIT is where a lot of investors come together, pool their money, just like they do in mutual fund. This makes it possible for individual investors to earn return from real estate investments without having to take the trouble of buying real estate, manage real estate, or finance the property, which needs huge amount of money anyway. They can simply invest in a REIT vehicle, a REIT, a real estate investment trust unit, and buy that unit. So that's what a REIT is. If you want to understand more about the REIT, we will come to the practical aspects. So REIT is a company which has assets offered to us in equity. So not exactly correct, but something like that you can say. So the important point is that, but just like mutual fund as trustee, the REIT also has a trustee who will generally be either the real estate builders, developers who understand the real estate market, who could be professional people. They set up the REIT trust and make an offering for the public to invest in the REIT. In turn, by definition, by requirement, by regulations from SEBI, a REIT is supposed to invest all the money that it collects only in the rental generating investment. So we had seen this. Let me just take you back quickly. So this is an important point, that owns, operates, or finances income generating real estate. So the REIT can invest only in those assets, all those real estates which are income generating. What do we mean here by income generating? Which are income generating real estate assets? Yes, rent. So the assets should be those which should be giving rentals. Which are the kind of assets which will give us rentals? Yes, commercials, office complexes. Yes, retail assets like malls, cinema halls, hotels. These are the assets. Warehouses. Yeah, a lot of you have answered all these questions. So these are the requirements that a REIT has to invest all the money collected into income generating assets, rental generating assets. And in turn, what happens? How do we as real estate investor get benefited from that? So as we discuss some more technical things very quickly, REITs generate a steady income. Obviously, when they are forced to by regulation, they are bound to invest the money collected only in income generating, which means only in rental generating assets. They will generate. And what is the frequency that in India we generally get rentals? Yeah, generally it is monthly. In some exceptional cases, it can be higher, it can be lower, and things like that. So obviously, a REIT has invested money in rental generating, income generating assets, and as a result, it is generating steady income. What does it do with that steady income? We will come to that. So by definition, yes, distributes it. It by the composition of the structure of the REIT, by the regulation, it is bound to. It is compulsory for a REIT to distribute that income. How much of income is it forced to distribute? Yeah, so Hitesh has said 95%. No, that's not the number. Yeah, a lot of you have said 90%. So minimum 90%. They can always distribute more than that, but minimum 90% they are bound to distribute. And generally, the REITs distribute on a quarterly basis. So while they probably are getting it on a monthly, but distributing on monthly is quite expensive and cumbersome for investors also to receive smaller amounts every month may not be as beneficial as they receive a relatively higher amount on a quarterly basis. So quarterly is a frequency which is mixed between receiving it regularly and not receiving smaller amounts monthly. At the same time, not taking it to 6 monthly or annual, which you have to wait for so long. So that's the benefit that we get as a REIT, that we have not only been able to invest in property through financial way, reducing our minimum investment requirement, but we are also getting regular income, mostly quarterly. Most REITs are publicly traded like stocks, which makes them highly liquid, unlike physical real estate, which we saw earlier. So what benefit does it give? They are listed, they are on the stock exchange. How can I start a SM REIT? So that's not the topic for today. We can take that separately. You can go on SEBI's website and also get all those details. Yeah. So exit benefit, Shomita Saha has said, yes, very true. So not only that you are getting quarterly earnings or steady earnings at a reasonable frequency, you suddenly need money for some emergency. Then you can go and sell those REITs on the stock exchanges. There is no compulsion on you. There is no lock-in. There is no binding on you to continue to hold those. So that's the second advantage, as we saw comparison between financial and physical: liquidity. Then REITs invest in most real estate property types, including, we saw earlier, cellular towers, data centers, hotels, medical facilities, offices, retail centers, and warehouses. And mind you, I have already said that REITs are bound to invest in rental generating, which means they are bound to invest in occupied property. They are not allowed to buy or a mall or invest in a mall which is not occupied. They are not allowed to invest in a data center or a warehouse which has not started to give rentals. Of course, the occupancy can keep going up higher or lower, but they can't do investments in the building stage, construction stage, initial stages, because that doesn't give them earning, and that's not their job. Their job is to earn income for you and distribute it. So these are the biggest advantages of REIT, as we have seen the comparison. Going forward, in terms of some more details, so what is the objective of a regulator? What is the objective of us as in India as a structure behind starting REIT? We have obviously seen multiple objectives. From an investor's point of view, to give him an opportunity to be able to invest in real estate asset class. He doesn't want to invest in equity or financials or gold, or he wants to invest in them also, but he wants to take exposure to real estate also. If he does this physically, it is quite a lot of disadvantages that we saw. Too much of money required, no liquidity, high transaction cost, high maintenance issues, default issues, and all those get kind of removed when we invest in the REIT. That's the objective. At the same time, what it also does is that from the industry's point of view, from developers' point of view, from a builder's point of view, it provides them liquidity. They indeed have to put in money while constructing a mall or constructing an office space. But once they have done it, they have leased it, they have brought the clients in, the mall or the commercial space office has started generating REIT, they can sell these properties to the REIT and generate money to invest for them in future assets. What is a developer's business model or business? What is a real estate builder's business model? Is to keep developing properties, keep building properties. For that, he will keep needing money and in thousands of crores. Now, If he doesn't have an exit mechanism, if he doesn't get liquidity to sell his existing assets, where will he keep getting so much money from? Of course, he can borrow from banks and things like that, but there is always a limit. So this is where he comes to the REIT and sells his property, generates his cash of 400 crore, 500 crore, 100 crore, 50 crore, whatever, and reinvest in other property. So that's the other advantage of the whole REIT. One is from the investor's point of view, how much returns are generally generated. Okay, we'll come to that. Is there capital guarantee, and what is the minimum investment? We'll come to minimum investment. There is no capital guarantee. What are the things in our lives, the two things in our lives that are guaranteed? Can anybody type in quickly while I take a break to drink water? Okay, somebody has said death. Very true. So that's first answer. What is the second thing? Yes, death and taxes. Only these two things are guaranteed in life. No other things are guaranteed. Even the bank deposit that we keep, we think it's guaranteed. No, that's not guaranteed. That's guaranteed only up to 5 lakh. If a bank defaults, bank fails, if your amount was more than 5 lakh, then you get only 5 lakhs, not more than that. So there is nothing guaranteed here. But as a regulator, SEBI has done, and like any other mechanism, they have tried to create a reasonably foolproof, safe mechanism. And that's why, as I said earlier, they have made it mandatory for REIT to invest only in income generating asset. They can't invest in under construction assets while building up, because there the risk is more higher. The construction may not get completed. Construction gets completed. It may not get completely rented out fully, and all those. So all those risks have been reduced. Risks have not been eliminated, have not been made zero, but have been reduced, have been managed, have been mitigated. They can only generate in income generating. Also, for the benefit of a small investor, it has been made mandatory to distribute 90% of the income, minimum 90%, so that it comes back. Can we compare REITs with income distribution from mutual funds, which give us regular dividend payout? Let's keep them separate. A equity mutual fund or even a debt mutual fund gives you distribution can give you distribution, let's say specifically equity, even from capital appreciation, and to that extent your NAV can fall. Here there is a slight difference. Right now the distribution that we are talking of is only being given by the REIT, is only being given out of earnings. Of course, if it sells a property, what happens also we will talk. There also it is bound to give you the share. So there is marginal technical difference when we talk of income distribution from mutual funds versus the income that is coming in from REITs. So going further, Indian REIT regime is aimed at providing an organized market for retail investors to invest and be the part of growth of Indian real estate. We all know that India is growing. What is India's GDP growth rate? Quickly, anybody? Okay, 6-ish. No, we are 7. Yes, no, we are not 8 also, but yes, we are 7% plus. And how do we rank in the world in terms of the ranking of growth rate? Yes. No. So let me clarify the confusion. Some of you have said 1, some of you have said 5, and then there are other numbers. These two numbers are correct, but in different perspective. When I talk of GDP growth rate of 7% plus, we are number 1 in the world in comparable economies. There might be some smaller economy, $1 billion, $2 billion, which suddenly might grow at 10, 11, 12, 15%. We are not talking of that. We are talking of reasonably big economies. So in terms of growth rate of 7% plus, we are number 1. But in terms of size of the economy, we are at number 5. Number 3 is what we are targeting to reach. Not reach to, I mean, targeting to go to, we will probably reach also. So these are the two differences. The 5th is the current number in world in terms of size. So coming back, an economy which is at number 1 growth rate in the world will obviously keep growing in multiple terms, in terms of its financial markets, in terms of equity asset class, also in terms of the real estate asset class. So the REIT is a mechanism which gives you exposure to growth story of India towards real estate. What else? It's a professionally managed ecosystem that is risk averse. Now, this is where somebody asked guaranteed is what, please focus, and is aimed at protecting the interest of public. So there are 3-4 important points here you should note. So number 1, It is professionally managed. What do we mean? So what we mean is that just like in mutual fund, there is an investment team which manages your assets, which keeps doing research, keeps analyzing the market, the economy, and tries to use best of its judgment. Again, there are no guarantees. Some of their investment calls may go wrong, do go wrong, but still, compared to a retail investor or a layman on the street who is busy doing his day-to-day work or day-to-day business or day-to-day job, and doesn't have time to focus on all these things, these are the people dedicated to analyzing this. Similarly, in REITs, there are dedicated people who understand. Over the years, they have developed the capability of understanding real estate market. Does it work like wealth managers? Something like that, yes. So the people here are more expert in real estate as an asset class, may not be expert in financials, equity, debt, gold, and things like that. So that's a professional team which keeps managing your assets and tries to get you the best of the assets and best of the returns. Number two, risk averse. So that's another important point. Not risk zero, not risk completely eliminated, but they will generally be risk averse, will not want to take too much of a risk. That is mandated also by way of framing of regulations and by way of approach also, that they shouldn't be taking too much risk. They shouldn't be. So sometimes you might get yield or the rental very high, but then that's a clear warning signal that is there something wrong there. So that's something that key. And the third important point is aimed at protecting the interest of the public. So that's another important point. So those are all the advantages and benefits of REIT. As I said earlier, it of course provides an exit platform for the real estate sector to ease out their liquidity issues. So a developer, a builder will keep needing money to keep building assets more and more as we grow. Can we get capital appreciation on real estate also? We will come to that, but the answer is generally not much. It's not that there is no chance, but generally no. That's not the objective. So these are all the advantages or the kind of the background of the REIT. What is REIT? I've tried to explain to you. Okay, so Kotak International REIT for growth scheme, 3 years, continued negative returns. So first, I am not addressing any individual brands or products. Two, I don't think the REIT that we are talking of available for public is the one this. In India, there are hardly any number of REITs. I'll come to those which are all. Can you enlighten us more on interest of public? That is capital protected. So I've been talking about it. I will talk more as we keep going along. What is the quantum of REIT as compared to mutual fund? Very low, probably not even 10%, not even 5%. What is Intergrow, Umar Hussain? I don't know. That's certainly not a REIT in India. Okay, if capital appreciation not the aim, then why should we invest in the REIT for just 5% dividend in this? Good point. So that's the call that one has to take. When we invest our money, we want to diversify it across various asset classes. Typically, those asset classes are equity, debt, gold, which we traditionally also have, and some of us may want to invest in real estate also. So it's a matter of choice. There's no compulsion. Just like we have a choice when we want to invest in mutual fund, again in mutual fund, whether we want to invest in debt or equity, we have choice. Again, real estate is a choice whether we want to invest on. So some more things which I have already highlighted. Mandatory distribution we have discussed of at least the important point 90%. So it can be more than 90, but yes, it has to be minimum 90%. Again, now what happens when a REIT sells? So when REIT buys an asset which is income generating, if it wants to take a call, like we said, professionally managed team keeps managing it, it can sell the asset also. There can be many reasons that asset's income generation capacity has reduced, rate of return has come down, could be reason. Two, it's finding another asset which is giving much higher return, so it needs money. It can raise money again from public. REITs are allowed to borrow also up to a certain extent. They can borrow also. But they might want to sell a non-performing or even a performing asset and want to, now when they sell, what they generate money. What is it that they have to do with that money? Anybody quickly types in, although answer is already here. Okay, rebuy, new property investment, better assets. Yes, yes. So they can do all that, but if they don't do, or if they don't have any scheme giving negative returns in REIT, the answer is no. Coming back. So if they don't buy a new asset, what is the compulsion on them? Again, just like income, mandatory distribution of at least 90% of the sale proceeds. They have to give it back to us, back to you, back to investors. But yes, if they reinvest it, then that is not the case. They'll reinvest in another income generating assets, and they will continue to give you, as we said in the first one, 90% of the income that comes in. But if they don't reinvest, if they don't have an opportunity to reinvest, that's how your protection comes in. So there were a few questions. How does a minority investor or a REIT investor get protected? What is capital protection? So there's no capital protection, but these are the mechanisms of protection of retail investor that is there in this. Okay, in terms of disclosure and information also, there are some mandatory requirements. Mandatory requirement of a full-fledged valuation of all the research assets on yearly basis through a registered valuer. So this is an information that REIT has to give in. Generally, it's available on the REIT website. They do share it with the stock exchanges also, from where you can get it. Do REIT give monthly dividends? No. Current practice is to give you quarterly. What is the minimum investment value? I will come to any guesses, Vaishali, now that you have typed the question. I will come later, but we can take it at this point of time also. Any numbers? 5,000, okay. 400, okay. 1 crore, okay. 350 rupees, okay. 100, okay. Yeah, okay. Okay, thank you. So it's nowhere 1 crore or 50 lakhs or 5 crore. Otherwise, there's no point taking this session for general public, for retail investors like all of you. AIF, Alternative Investment Fund, is a product which has a minimum of 1 crore. Coming below that, PMS, Portfolio Management Services, is a product generally for investing in equity, can be used for investing in some other asset classes also, has a minimum of 50 lakhs. And coming below that, as we saw earlier, when we invest in SIP, there is a minimum of 500. And when we invest in a mutual fund in lump sum, I think that's 100. So the minimum investment now in REITs is also in that range of 200 to 250 rupees. There are REITs listed whose market value is currently around 250 to 350 rupees. You can buy simply 1 unit of those. And that 1 unit is 350 rupees or 250 rupees. Yes, as some of you have written, Hitesh has written, Subodh has written. Yes. So it's not 50 lakhs, not 25 lakhs. No need. No need. Earlier, when the REIT was started as a new concept, even InvIT, when they were started as a new concept, they were thought that retail investor may not understand these products, and rightly so. So the minimum investments were kept higher, 50,000 rupees. In fact, for InvIT, when they started, it was kept at 2 lakh. For REIT, I think it was kept at 50,000. The last REIT public issue which came in, just like if you apply for public issue of equity of shares of any company, minimum investment is 15,000. Even to apply in the REIT public issue, the minimum investment required was only 15,000. To buy it from the secondary market, the minimum investment required is only 250, 300, 350 rupees. So that's the answer. Again, coming back, declaration of net asset values within 15 days from the date of valuation, any acquisition, transfer of REIT assets to meet prescribed valuation guidelines. So this is how the investor protection by regulation has been ensured, has been given wings, has been given tooth. That this is how investor protection has to be there. Information sharing. What is the right time to buy a REIT? What is the right time to invest? Can you tell me? So there is no right time. If you are not started making investments, they say that the right time to invest was yesterday, which obviously you missed. So the next, what is the next right time? It is today. You go ahead and invest. Of course, it is simple when I say it is not how it works. You have to do your asset allocation. You have to do your risk return, your risk profiling. You have to look at the risk return, expected risk return that you want. You have to consult your financial advisor. That's the most important thing. And you have to decide which asset classes you want to take exposure to. REIT, you should take exposure only if you want to take exposure to real estate. If you don't want to do that, you want to do gold, you have either physical gold or gold bonds of Government of India or gold ETF. You want to do equity, you have direct shares, you have mutual funds, you have so many other products. You want to do debt, you have mutual fund debt, you have fixed deposits of banks, fixed deposit of companies, corporates, RBI bonds, and things like that. So that's the point. So these are some of the points that I wanted to say REIT. Now, in terms, we were to quickly put in on one sheet what are the advantages of REIT. We have discussed it repeatedly, but still, to highlight it for all of you, I have summarized them here. So these are the various advantages. Liquidity, as I clearly said, you can sell it whenever you want. Generally, T+2, your money will be in your bank. Low investment, we have already said 250 or thereabouts, one unit you can buy. As low as 250 rupees is the minimum investment. Access to high quality multiple properties, that's important point. With 250 rupees and with you as a retail investor, you want to go and take exposure to any property you cannot get. Here, of course, you will get very fractional exposure to that investment, but you are getting. So that's the advantage, that you get high quality property. Why high quality? Because there's a professional team managing it, and they will try to make sure that they invest only in high quality properties. You also get exposure to multiple properties, and to that extent you get diversification. A REIT invests in probably 5 properties, probably 7, probably 8, 10, maybe less, maybe more. Imagine a scenario wherein you invested in only one property, you had only one flat, you gave it on rent, and that person started defaulting on the rent payment. Then your income has fallen to zero. Here, since it's investment in multiple properties, there's a diversification. Even if after best of the risk management practices, analysis, study of the market, the professional team does before investing, if the returns from one property doesn't come for whatever reason, your overall investments don't turn bad, because the return from other diversification because of multiple properties will keep coming. Active professional management, we have already seen that. There is a team which keeps doing it on an ongoing basis, which keeps analyzing the real estate market, the demand and supply scenario, the rental rates, the yields, the prices at which it should buy from developer, so that it tries to get, obviously you would want to buy it at the lowest possible price, and as a result want to increase. Can we do SIP in REIT? I am not sure if that's because the REIT you will have to buy from. So that's another point that one should keep in mind. For buying a REIT, you will need a broking and a demat account. REIT, you can buy it on the stock exchange. It's not like a mutual fund which you can go and buy on a mutual fund platform, and you don't need a demat account for a mutual fund. But here you will. So to answer your question, can we do SIP in REIT? You will have to see your broker. He provides SIP in multiple investment opportunities in equity shares. If he provides it in REIT also, you can do. If not, then probably you will have to do it manually every month. Can we purchase this from NSE platform? Yes, but to access NSE platform, you will have to compulsorily go through a broker. Can the payouts be reinvested? No. Whatever rental earning a REIT is receiving, earnings, they have to necessarily return it to you. 90% as we saw. For reinvestment, they can either sell one of the existing assets and reinvest. They can do a follow-on offering and raise more money from people. They can borrow from banks, or they can do a equity private placement also, wherein they need not do a placement to the public. They can do it from institutional investors and raise more money and then invest. Can REIT traded on BSE and NSE? Yes, it is indeed getting traded on BSE and NSE, but to access that, you will need a broker account. Which top broker facility REIT, doesn't matter top or bottom. Every broker provides you access to all the available investments available on the stock exchanges. What REITs category 1, 2, 3? In REITs, as of now, there is no category that is in AIF. Alternative investment funds are category 1, 2, 3. Yes, more modifications of REITs are likely to come in. As I said a while ago, in November, SEBI has allowed SM REITs, small and medium REITs. So those will come in. Global practice, when you go, all these REITs. So we saw REIT can invest in data center, in warehouse, in hotels, hospitals, malls, and things like that. Globally, these REITs are segregated. There are REITs on malls only, REITs on data warehouse only, REITs on hotels only. So again, within real estate, you can choose that my comfort is that only the malls will do well, hotels will not do well. So I want to take exposure only to that REIT in which investment is in malls, not in hotels. That choice you have globally. Right now in India, REIT market is not so much developed. In the time to come, it will get developed, and in India also you will have those specialized REITs. Are REIT allowed to invest outside India? No. Currently, no, they have to invest in the real estate investments assets only in India. If capital protection is not guaranteed, is it better to buy physical property? Subodh Gupta. Is the capital protection guaranteed in physical property? They are always standing, but their value keeps going up and down. And the biggest disadvantages that we discussed are the issues of liquidity, issues of maintaining them, and issues of default. So take your call. There's no compulsion. You always have that investment of investing in physical property. Coming back, the other advantage is earnings predictability. So there is a reasonable predictability. As I said, there is no guarantee that you will keep getting money 90% minimum, whatever your REIT is generating. The general payout frequency currently being followed by all REITs is quarterly. High payout ratio, 90% we have seen, and operational flexibility. So these are the various advantages of REIT. Now we are coming closer towards the end of our session. So while I have been trying to answer all your questions, but if there are any questions you want to ask, you can keep typing in. Partial amount withdraw. There's no unlike a mutual fund, there is no investment or withdrawal or subscription or redemption. You can buy how much money you have, those many number of units. When you need money, you can sell partly or you can sell full. Do we need a specific account for REIT? No, you don't need any specific account, but you have to have a broking account to buy REIT. Top REITs in India, can it be pledged? No, as of now, generally REITs haven't been accepted by banks or brokers or others for accepting as a pledge. But yes, there's nothing if your lender accepts it. Some of the disadvantages also, which for a retail investor are not really significant. No minority control. You don't have too much of control in managing the affairs. There are some operating costs when there is a professional management, when there is a trust, when there is a management company, they have some expenses. Stock market dependent prices. So sometimes when the market falls sharply, just for the sake of it, REIT prices also fall. There may or may not be any reason. Moderate income growth potential due to high distribution. So that's the reason that why the REIT prices will not give too much of return in terms of capital appreciation, because the objective is to invest in rental generating assets, and most of it is getting high distribution. 90% of it is getting distributed. So expecting a capital appreciation is not much. There can be exceptional cases wherein we can get that return. So just for the information, this is not a recommendation, but you should know, otherwise you will be kind of left in the dark after the end of the session that which are the REITs available in India. Can somebody quickly type in which are the REITs available in India and how many of them? Yeah, so Mindspace, Embassy, Byret, which is Brookfield. There's nothing from Piramal. And Nexus. So as of now, in India, only these 4 REITs are available. As I said, these names I am giving it here only for your information. There's no recommendation that which one you should buy or not buy or anything like that. You should know at the end of the session that, okay, you understood what is a REIT, but which are the REITs which are available in India for investing, for buying. Right now, so all their IPOs, the initial issues, whatever we call them, came quite a while ago. Right now, they are all available, listed on the stock exchanges. So they are available for you to buy from the stock exchanges. There's no lock-in, there's no minimum investment amount required. You can sell them whenever you want. So these are the 4 assets that we have. Okay. So quickly, any last questions? I can try and answer them. As I said, that we are coming. Yes, so we have taken all these 4 names: Nexus, Brookfield, Mindspace, and Embassy. Disadvantages slide somebody wants to see. Okay, quickly I'll take you back. All those are actually very kind of insignificant disadvantages compared to the advantages that we saw. Can we buy REIT in fraction? I don't know what you mean. You can buy one unit. You can't buy less than one unit. And one unit hardly costs you 250 to 350 rupees. How much more a fraction of that you want? You are in turn getting exposure of a fraction to the property that REIT has invested in. So don't worry about you wanting to buy it in fraction. Please tell which REITs are invested. I already showed you that 4 REITs are invested in Indian market. So I'll just again put those names. So these are the 4 REITs. What is average return annual in these instruments? Yes, important question, good question. So currently, given the way the whole real estate market is structured, the real estate prices are structured, and the rental markets are structured, from all these 4 REITs, you are getting annualized return 7% plus minus 1%. So let's say range of 6 to 8% distributed over 4 quarters is what you get. So that's the current return that you are getting from the REITs. A short procedure, there's nothing I have explained to you repeatedly. The procedure is simply you have to have a broking account through your broker. You have to go and type in REIT, which REIT you want out of all these 4. Look at the price. You must have that much amount in your bank and buy that REIT. Can an individual, after selling a property to curtail capital gain, invest in REIT? No. There's no capital. Those are separate rules. I think Section 54 AEB bonds and all those things. Today's session is not on that. But there is no provision to invest money generated by selling property and investing in REIT and getting benefit of tax. No. You always are free to invest in REIT, but there is no tax benefit. 6% return per year or quarter, it is per year. 6% quarter means 24% annualized return. You don't get in any product. In any product that you are getting 24% kind of return, get worried, be cautious. Those products are not going to last. Those are close to Ponzi schemes. Okay, so some people have asked tax implication. There are multiple tax implications. So these distribution of quarterly comes in 2 ways, more than 2 ways. The money that they distribute, they can give you as dividend and they can give you as return of capital. If it is return of capital, on that part, there is no tax. But mind you that your original investment's value will fall. So when you sell, the capital gain that you have to pay will increase. On the part that they give you as dividend, you will have to pay the tax which is applicable on dividend. Some part they sometimes give you as interest also. So on that part, you will have to pay generally the marginal rate of interest, which is closer to 30%. So those are all those things you should check with your investment advisor, financial advisor, tax advisor before investing and before getting. But as I said, these are mainly the money is returned and the amount is mentioned and told to you that if I'm returning 5 rupees to you, 4 rupees is return of capital and 1 rupees is dividend. In some cases, there is interest also. And on 4 rupees, there's no tax, but on 1 rupee, you will have to pay tax as per your dividend calculation. That 4 rupees or the actual selling of the units, when you do, there will be a capital gains tax also. Okay, I think we have come to the end of today's session. Thank you so much for participating. Pragya, over to you.
Thank you very much, Kun sir, for this very enlightening session on REITs. I would also like to thank the participants of today's webinar as they made this webinar very, very interactive. Thank you, everyone.